just get a general sense of how the markets are looking right now, because we've just had tsunami and now it's the recovery process in Japan, and also the continued military action over Libya, which seems to be protracted.
Sure, thanks, Lerato. It's great to be here. Firstly, just with respect to the emerging markets, I think one of the phenomenal things that's actually been happening over the past few weeks is that you've actually seen $2.6 billion flow out of the emerging markets last week alone, and that brings the total to this year being $26 billion. So, in terms of what's actually been happening in terms of fund flow, the emerging markets at the moment, people are cautious.
Yeah. Okay. And does that reflect in Africa?
Well, at the end of the day, Africa is a different kettle of fish to the other markets. Yeah. The so-called drivers are not the same across the various bourses. And when you see up days across the major markets around the world, that's not necessarily the case in Africa. And Africa's swings are generally a lot more magnified compared to those of the other markets.
Let's talk about the best performing bourses, starting off with Mauritius, which has gained about 6.6% in US dollar terms. What's working in their favor?
Well, Lerato, if you go back into local currency terms, the market is actually only up 3.1%. So at the end of the day, that really was a story of currency working in their favor. But suffice to say, the banks had a great trot last week. You saw the likes of Mauritius Commercial Bank and State Bank of Mauritius having great performances. And then also, in addition, you did see one or two large bookovers that really did push that market a lot higher.
You say it's a currency story, and yes, we've seen a relatively stronger rupee today, trading at just above 28 rupees against the dollar, but it's been under the 30 rupee threshold. What's propping up this currency?
Well, that's correct. I mean, as things stand today, we've got an MPC meeting that we're meant to actually be hearing the results of any minute now. The consensus is for an interest rate hike. At the end of the day, one has to really question Mauritius in terms of their strategy. Is their strategy for that of growth, or is it to really curtail price inflation? Because where we stand right now, Mauritius is really an import-driven country, and it's very much a services-driven country in terms of tourism and the like. And we have seen tourist numbers really going through the roof.
Namibia and South Africa both gaining respectively 5.1% and 5% also in dollar terms. What's driving these markets up?
Well, in terms of both the markets, very much got similar, top stocks within their major constituents, the likes of Anglo American. You've got the ShopRites, you've got the Sanlams, and those all had really solid performances last week. But furthermore, if one really looks in terms of the South African market for last week, once again, story of currency performance really coming through there. The local market is only up 3% in local currency, but 5% in US dollars. But suffice to say, last week there were rumors that Harmony was going to get bought out. That really pushed a lot of the gold stocks a lot higher. And then you also saw the likes of Naspers, a large heavyweight in the index, rallying quite hard. And then the retail sector also performed exceptionally well.
Nigeria, I think there are a variety of things going on in Nigeria. We did see it gain about 2.2%, but this is a market which since January has really been trading sideways, one day up, next day down. We have seen the banks starting to release results, and I think that's what buoyed the market last week. We've even seen a decision by the Central Bank of Nigeria to increase rates to 7.5%. What else is at play here?
Correct, Lerato. I mean, at the end of the day, it's investors are very cautious. We're sitting in a situation where in a month's time, or less than a month's time, we've got the elections in the Nigerian market around the 14th of April. And as you've said, banks are coming out with their results. On net, the results have been positive. But they've come off such extremely low bases that it's really difficult to get a true sense as to where they're going to be in the year ahead. In our opinion, next year is going to be a phenomenal year in terms of earnings growth. But once again, the bases are so low and the earnings are really coming off these very depressed numbers.
You talk about the elections coming through in the next fortnight, and I think for many of those who've been cautious about this market, that's really been their reason for not being particularly active in Nigeria. How much longer can some of that jitteriness continue?
Well, in terms of the Nigerian market, it's really been all over the show over the past couple of weeks. But suffice to say, if one just really looks across the African markets in terms of where we are right now, you're seeing a lot of portfolio rebalancing. You've seen the likes of the Egyptian market down in excess of 20% year to date. And you've really seen a lot of movements around the various bourses. So you've seen outflows out of certain markets, inflows into others. Right. And Nigeria is really one of the more liquid of the frontier markets within Africa. So arguably at the end of the day, it's really just going the ebbs and flows.
Let's talk about the worst performers, and you mentioned Egypt. Now, first question, is the stock exchange open again?
It depends which day you ask the question. Last week we basically had it opened up on the Wednesday. We had limit down Wednesday. We had limit down on Thursday. Obviously closed Friday, Saturday, And then yesterday, the market did bounce a little bit. But in terms of where we are last week, market down 9%. That's quite a chunky number. Year to date, down 27%.
Yeah.
That's the worst performing market across Africa.
Obviously, I mean, they've just had a revolution in that country, and there's just the broader fear of contagion and the spillover effects into the rest of the Middle East. The interesting phenomenon, though, is that Egypt is historically one of the better performing bourses. And just in terms of attracting private equity into an economy, North Africa was the place to put new Africa funds. Post this crisis, will they regain that stature?
Well, from our perspective, the corporate governance within Egypt is a lot better than a lot of the other countries. So one has to really put that on the table. Then number two, if one just really looks across the board, you've got the likes of Orascom Telecom. That's in M&A talks currently. So clearly that's holding up an element of the market as well. But in terms of the actual flows into the Egyptian market, our view is at this point in time, market's looking relatively attractive.
Okay. Talk to us about what's going on in Zimbabwe. Both the Zim mining and the industrial index down. Is it the renewed talks of indigenization?
You've hit the nail on the head. But one has to really remember that the Zimbabwean market, as well as the other subsectors, they've all had phenomenal rallies over the past 2-3 weeks. So this is really just what I'd call a small pullback. And then once again, in terms of this Indigenization Act, it's really impacting across the board, whether it's the South African mining companies that have got exposure to Zimbabwe, or whether it's the actual Zimbabwean companies that are, at this point in time, really struggling to raise foreign flows. At the end of the day, most of them are undercapitalized. They need additional capital, and they can't get that capital within Zimbabwe.